Hello, trading has closed on the 2nd of May, 2022. We always start with our disclaimer. Let's not disappoint. It's my trading plan for tomorrow, May the 3rd, 2022. Remember, it's my plan. I can change it. The plan can be completely wrong. Any trade you make should be at your own risk. If you want to order my webinar, I do need your email address. If you want a book with all my rules, you can order from Amazon or from the publisher Harriman House. Well, we had a few calls. Look for the pattern with the early low. That's certainly it. And tomorrow has the early low as well. We didn't make a directional call, which turned out to be a fortuitous thing because had I said we were going higher, you could say I was right or you could say I was wrong. And had I said we're going lower, you could say I was right or I was wrong. That's not very helpful. We did say we had a possible crash, even though they were rare things. We need to gap down smartly. That didn't happen. And we said this would usually lead to further declines today, which it did. But we said if we gapped up smartly, we could have a good rally. But we didn't gap up smartly either. So officially, we really didn't have a directional call. Here's what we said. Bears need to break support. Well, they broke support and the break got rejected, as we'll see. We had a target 4187.44, said it might fail, and it did. Well, during the day we got an ultimate buy signal. That's already met its target. System said it was false, price would retrace, they did. System said this drop was false, price would retrace, they did. We had this huge drop, the system said that break was false and price would retrace, and they did. Here's our daily chart with the TDST lines. Here's the last one. Support goes to one bar under the line. This bar is still overlapping this one. We still haven't undercut the low of one bar under the line. If you go one bar under the line and then you trade one bar under that low, then support fails. Until that happens, you're still in his support area on the daily chart. We broke through the 89-week moving average, but it's the week moving average. It's closing prices that count. After breaking it, we closed over it. This is the TDST line. The mark's support area goes to one bar under the line on the weekly chart. Now, in order to break it, you're going to have to make a low 1 week and then trade completely under that low the next week. So if you're a short-term trader, you won't know if support breaks for at least 9 more trading days as a minimum. But right now, you're in support by his work as well. This is the E-mini contract. Volume spikes are associated with lows. They don't have to be long-term lows. This one didn't last more than a few days. And of course, we could spike higher tomorrow, but today's spike is compatible with a low, at least in the short term. We had a target. We said we'd go under this trend line by at least 362 handles. The trend line was at 44.57. We traded 395 handles under that, so the target has been satisfied. And it's a target, it's not a stop and reverse, but it's not uncommon for there to be a reversal. Well, here's our wave count. Our plan was we'd have gray A, gray B, and we're in gray C. And our plan was you'd want gray C to be equal to gray A, and we get a low around 3909, give or take a few points. But of course, it's not the only valid count. We'll come back to this in a minute. That's the same chart. Here was the idea I had. I said you didn't know how the waves went. I had to send this wave 3 down. Certainly the count doesn't break any rules, and that certainly looks like an impulsive drop. But, there's always a but, it's not the only way to count this. Let's say instead of dropping 100%, we dropped only 78.6. Bingo. That's where we stopped today. If that's the end of wave gray C, then you have an ABC which completes A of C, and there's a ways to go before we complete the whole correction, which actually makes more sense. If you've rallied for years and years and years, you would expect any drop to last a significant amount of time. So at least there's Fibonacci support at today's low. And that would make the count look something like this. You'd have 1, 2, 3. Forget the colors because I wasn't certain of the degree. 4, and then 5. And if you look at it on the longer term chart, here's the wave balance. You get your A, your B, you complete C, which would be A rather than this A. You get great fibs. 5 is twice 1. These are all the impulsive moves, and it's 5 waves down. Not only that, you broke through the prior low here and then closed over it, which is a rejection of the break. Now it has to be confirmed. I mean, if we gap down tomorrow, take out this low, this doesn't mean a hill of beans. It's not the only valid count. But it's a valid count that shows we've completed an ABC, and it suggests that for a while at least we're going to have a good rally in wave gray B before the decline begins again. Remember, we have sentiment readings that in the past have been seen only at very significant lows. So, tomorrow's pattern has the early low. It could gap up. Typically, it's a rally day with a high in the final hour. If it's weak instead, more weakness should ensue in subsequent days. We have an E-mini volume spike. We have a VIX Bollinger Band reversal buy signal. We have an elevated put-call ratio and extreme sentiment readings, all of which are compatible with a low being made today. Now, it needs confirmation by continuing higher tomorrow. If you don't go higher by even 1 cent, this doesn't mean a thing. Sentiment readings are those seen only at lows of significance. Of course, they could always get more extreme, but it's possible we completed gray wave A today and that we've begun gray wave B. I'll grant you it's not the only way to interpret this, but as of now, it looks like a plausible interpretation. So this could be a very significant low. We could have a very good rally coming up here, but it hasn't been confirmed yet. If it is confirmed, we just continue higher if that happens. We've dodged the bullet for now, and I think we'll trade lower later, but we could trade significantly higher first. There are just too many bears out there, and such pessimism deserves to be punished. And that is today's call.